Hello, this is Phil, the Laptop Trader channel on YouTube. Welcome back to our community. I'm just here to share my experience and give back one video at a time. This video series will cover market cycles, stocks and ETFs, technical analysis, trade entry, trade management, risk management, and how to create confidence by putting the odds in your favor. My email contact is laptoptraderphil@gmail.com. Caution, most stock traders lose money. Please protect yourself at all times. Nothing discussed in this video is trading or investing advice. This channel is for informational purpose only. Please seek qualified help if you need help investing. Start now by educating yourself on how markets work and finding out what is right for you. Invest in yourself and then invest in the markets. So this video today is going to be a compilation of 30 trades in 30 days. I show some specific steps to success and how to make and take live trades. I will enter 30 new trades over the next 30 days and show you the results as a challenge to myself and to the community to show you in detail that money and trade management is the key to success. So this is our 30 trading days of Christmas. This extended past Christmas due to holidays and just some of the timing in the market. So here were my guidelines to entry and basic trade analysis. I just picked these numbers out of error, but using the $9,000 of total capital, I could take 30 trades using a $9,000 account. If I divided that into equal amounts, I would have $300 per position max. If this would be too much for you, then you could use something like a smaller ratio, like a $900 account, and use $30 position risk per trade max. So each trade will use $300 and a stop loss, which means we cannot take trades on stocks that are over $300 in value. We're going to use a stop loss strategy to further reduce our risk to less than $50 per trade, or 0.55% risk of our account. We will either stop out for a loss, we'll take profits at some sort of target, preferably 2 to 1 or higher, or we could sell half at target and hold the other half for a larger gain, which is kind of my preferred thing to do. This strategy will be based on current bullish market environment going into the end of 2024 and into 2025. So we're going to be long stocks. We'll be buying expecting appreciation or higher prices. This approach will be dependent on stage, trend, daily pattern recognition, and we need to be able to assess opportunity using price charts and using strict money management. This will also depend heavily on risk to reward of at least 2 to 1. Using trade management and for sure taking any stop losses when they occur. We must cut losses or this strategy will not work. Then when this challenge is over, which it now is, after these 30 trades play out, I will prepare a report for us showing the results of this activity. You are welcome to follow along if you're new and or paper trade for yourself. I will report a win-loss rate or winning percentage, my average win and average loss, my largest win and largest loss, and I'll report any profit or loss. There should be a profit over this period of time, but it will take more than 30 days for the results to play out. I intend to show that you can trade any price stock within a position limit. It's okay to take small losses and try for larger gains. It's also okay not to trade at certain times. And it's okay to trade different patterns. And I would suggest not taking names off of a list if you were to stop out. that was kind of a mistake I've made in the past where something stopped out and I just like threw it out in the trash. Like this company no longer matters. That's kind of a mistake. So I always keep these names on my watch list. I'm going to demonstrate why we use stop losses and risk management. I intend to show that markets can and do change quickly. I do show adding to a winning trade. This happened one time during this challenge. Price charts. We're going to use price charts showing our entry, stop, and target and the result. So I'm going to give you this challenge in picture form. And also there's a spreadsheet at the end of the slideshow for if you guys want to review that. Only raise your position size and risk later on in your career when your account grows and you have some success. I show selling some of my position on a winning trade and why I did that. And sometimes our stop and or entry are not exact due to market conditions or the broker or the bid-ask spread. So many times it's called slippage. Many times you'll have put in an entry order and you won't get filled exactly at that mark. It may be a few cents higher or lower. And also when you stop out or sell your positions, that also can be slippage on the sell side also. So that happens. So what did we learn from this exercise? So it's important to track your progress or you will not know how you are doing. In fact, this was more challenging than I thought during this period of time. It's okay to take a step back and assess your plan, your management, because markets change, so we need to be flexible. Keep losses small and manage your wins in your open trades, such as raising stops and selling half of your position based on the charts. You do not need to have a high win rate to be profitable, but you will need some big winners and to keep losses small, so take your stops. By using the same risk per trade and using a stop loss to further reduce risk, we can trade individual stocks safely using share sizing. Use a small portion of your account size, called position sizing, to be able to take more trades and not let losses blow up your account. Even though this December period is usually bullish, usually over 80% of the time most years, this year was different and caught us off guard. But we still managed to make a small profit and stay in the game. If you blow up your account, you won't last and you won't be able to keep trading and learning. The game is not over until you run out of money. So trading long for appreciation in a downtrending market is very difficult. I did it anyway for you guys to prove that money and trade management are critical to your success. Patterns and trends and stock selection are keys to success, but not as important to your success as risk management. And I think I'll demonstrate that here. So first chart we're going to look at here is a daily chart over a 9-month period of the S&P 500 ETF, symbol SPY or the SPY. What we notice on this chart is over this period of time it's generally in an uptrend, and there was a few pullbacks during this period, such as at this time in July, also in August into September, and then here towards the end of the year we had a nice run up from November into December, and then we started to trend down in mid-December, starting with just this weak top, weak new high, and then this red wide range bar that happened right mid-December, and this was a really negative signal that this was not going to be a good December. And we can also see the same formation, the same pattern in the NASDAQ index, or using the ETF QQQ, also known as the Qs, right? Same kind of negative pattern there in December. So during this exercise, I'm going against the market. Also during this time, this happened. This is a stock I held since June or July of 2024. I bought it after it had a nice earnings report. We had a move up in price. I basically just bought and held it because I didn't have a lot of money in it. And eventually it started to move up in October, November of 2024. And then the company was bought out for an agreed upon cash sale, which resulted in this gap up. So when this gapped up like this, I sold half immediately that day. This was almost nearly a double in price from what I had paid for it back here at $236. So I didn't realize the company had been sold because I don't watch the news that much, but I do watch the charts. So what happened was during that, when I sold half, I put over $96 in my pocket and reduced my risk immediately. So stock price does not always matter. Risk, trade, and money management are more important, okay? So this was on again, I entered this stock at $2.36. This is like a penny stock. But sometimes stock price doesn't matter. If you catch a good move, you can make money in the stock market. And this was once that happened, I started looking into the news. And so I dug this up out of the news. So just highlights or shares the fact that Brightco stockholders to receive $4.45 per share in cash. So I closed out the other half of the trade after I learned that, and that's it. So that won't be, it's essentially not trading anymore once that happens. Next trade, this was the actual first trade of the challenge, symbol VRT, Veritiv Holdings. On 11/19/24, I tried to enter in the morning at a price of a limit order at 127.50, which is highlighted here by, on this day, this bar here in this area I tried to enter. Well, I didn't get filled, and the price moved past my entry. So many times I'll be at work, and I'll enter some sort of order, limit order, be filled, and many times it just goes past my order and I don't get filled. That can happen. So that's all I wanted to show there. I missed that trade, and then in hindsight, it didn't really matter because I missed it, and then it went up for a few days and then it sold off, which was happening to a lot of stocks at the time. So not a big deal. Stuff happens. You just have to accept some of that stuff in trading. Next trade, Energizer. This one we were filled, and this was an entry here. Now this was 8 shares, entered at 37.89 on this continuation after this kind of gap up. Earnings came out, nice reaction to earnings. Next day we have this inside candle. I enter in there, stop 35.97. I had a target up here at about 42. It got up to just below 40 and then sold off. So this, I held the stock for 12 days, only to see this thing start to sell off. And so I closed it up here when I raised my stop. I figured, well, if it's going to stop me out, let's just raise the stop. And so this has a very small gain of $3.60 on that trade. Never got near target. Next trade, Mobileye Global, symbol MBLY. On this one, we had an entry at $17.15 right here on this day for 17 shares. Remember, position management. we're sticking to $300 less per position. Has stop at 1696. Kind of had this buy set up here, moved up over the next 3 days, and then started to sell off, right? So anyway, this one, because of this, it kind of actually went down and stopped me out the next day at 1655, which resulted in a loss of $10.20. So that's kind of frustrating to see. You know, you made this choice, next day it stops out, you see it go up a few days, and you're thinking, okay, maybe it just wasn't the right time to enter, and then it pulls back and it gives you this pretty smooth area to buy into, and then you know, that was just a loss. I followed my stop, took a loss. Next day on 11/21, November 21st. This was Cardinal Health, symbol CAH. So this is a entry at 120, 120.46, 2 shares. Had this nice buy set up here after this move up, stop 117.50. I enter and the stock essentially goes sideways for about 7-8 days. Moves up, makes a new high. I actually hit my target that day. Just hit, I think it hit it by like 20 cents or something like that, 10 cents or 20 cents. I didn't, now this is kind of a mistake. I had no sell order in the system. If I had a sell order, I would hit a target, hit profit, and avoided all this, okay? So many times people don't put their stops in the system. I generally always put a stop in the system. But in a way, it's a mistake not to have some sort of sell order in the system at or near target. And this is one of those cases where I thought this is going much higher. It's in an uptrend. It had a corrective period. I'm looking for that next leg up. Well, you know, it hit target. I didn't sell. And then for the next like 7-8 days straight, it just sells. Anyway, this turned from a potential winning trade to a losing trade where I lost $5.92. So again, just one of those things that happens that, you know, an unforeseen circumstance, an unforeseen sell-off in December really affected this stock. Next trade was, again, we tried this again, Mobileye Global, symbol MBLY. Here we entered at 17.19, stop 16.45. It moved up over a 3-day period, sold half there. Then we had a target here at 1865. And then I held through this pullback. This is still an open trade. So we had closing profits of 10.22, and we've got an open profit of 45.10 on this trade. So we have a position in the stock after a downtrend, new uptrend with relative strength, sold half and have an open profit on the other half with half the risk in the future. If it was closed now, I have over a 5-hour win, and then we also raised our stop over our entry price. So entry was 17.19, our current stop is 18.45. So that's essentially, in theory, a risk-free trade. The only thing that could really affect that would be a major gap down under that stop and under our entry. So that's still an open profit trade. Next one, we tried Intel Corp, INTC. And if you followed this stock for any length of time, you know this stock has really been sold off pretty hard. It used to be a Wall Street favorite, and it's just been a serious downtrend over years now. And anyway, I entered this trade after the first positive reaction to earnings in years. A gap up showed some support, but then it failed. So here's earnings. We had a nice move up after earnings, and then it kind of pulled back. It looked like this was going to make the turn up, So I bought 12 shares at 24.56 right here, stopped 23.54, ended up stopping out, and I had a P&L loss of $15.12. So here's a case where I had to stop at 23.54, but I was actually stopped at 23.30. That has to do with market timing and, like I said, the bid-ask spread, and if the stock, if price gapped down when I was stopped out. That's probably what happened there. Anyway, this stock was basically still in some sort of bottoming pattern and a downtrend. So that's always kind of dangerous when you try to get in early on a stock. And then on the right side it showed, will this head and shoulders pattern be the bottom? So you could see left shoulder, the head, and kind of that right shoulder. So maybe this will turn up at some point. It's just too early to tell for Intel Corp, but that was another loss. Next we had Vertex Inc. Company symbol VERX. So we had a breakout entry here. I bought 6 shares at 54.50, stop 52.37, target 58.76 up here. And this one, it made a new high. It never hit target, so entered here. And over the next 5 days, it actually made a new high. So that this looked like a good trade. It looks like we're going to get near target. It never did hit target. And then this stock started selling off with the market. So will price start to move up again? I don't know, but I've got a $19 loss in that trade. So that's that one. Maple Bear, which is basically Instacart, symbol CART. This was one where we had a gap down after earnings. So that's a pretty negative event. Anytime you get a gap down after earnings, that means something's not right with the fundamentals, or somebody on Wall Street doesn't like the fundamentals or whatever. But it can also sometimes be an opportunity to enter a stock at a lower cost. Anyway, generally it's not a good trade if that happens. But I was trying to make something happen. There was a fairly tight risk to reward. It didn't work. I had an entry of 43.70, stop of 43.10, so only a 60-cent stop on this fairly tight pricing here, and a target of 50. So pretty generous target, good risk to reward. It looked like there was support under here. Looked like it may still be building support. Anyway, this trade stopped out minus $3.60 on 6 shares. One reason I like this company is, one, I like the company, and two, the longer term weekly chart does not look that bad. So I may still invest in this company. And it's in a growing area of home delivery. So you just think about it, if we look back to Amazon years and years ago, at one time online book sales were looked at as kind of weird or kind of futuristic. Why would you buy something online when you could just go to the library or you could just go to a bookstore and get a book? Well, it turned out that people like that service. And I think people like home delivery too, just from a general view of the market. But we can see the chart, IPO is at 42. Generally, these IPOs don't hold up. They almost always sell off. Then they go through some corrective period, and now we're back above that IPO price. So that was one of those things I liked about this stock, is the price is actually moving up on a weekly basis. Next, we have Weave Communications, symbol WEAV. This one we took on November 27th, 21 shares, entry at 14.10, stop at 13.25, target 15.80, back up here, okay? Yeah, so we entered on November 27th. We sold half on December 16th for a $21.34 profit and an open gain of $18.50. So one thing nice is when you sell half, right? So we had a positional risk of $296.10, just under $300. We reduced that risk by $119 by selling half, and we're still in the trade. Also, notice the three moving averages. They're all moving up. See this blue line, this green line, and this red line? This stock is still in an uptrend on all time frames. And we can see different price support areas. Here's the area of what's called pivot support, right? And it's just, the stock is just kind of following these, just going up steady. All the moving averages are up and price support, where I have marked in purple. Now we can raise the stop up to 14.10, right? So we can raise our stop to break even, and we essentially have a risk-free trade. The only risk is if the stock went below our purchase price or went to zero. But we've immediately reduced our risk by raising our stop and selling half. So that is still an open trade. Next was a company called Energy Fuels, symbol UUUU. This one failed miserably. We had 40 shares at $7.37. Stop at $6.79. I entered when it made this new high, so we had this kind of pullback and then earnings, and then price kind of shot up, went sideways. This was essentially like a breakout continuation trade that basically failed almost immediately after that. And we took a loss of $23.20 on that. On this one, I happened to stop out exactly at my stop. So this is one where the stop price entered and the actual stop matched. But I think this demonstrates why we really need to watch with the individual stocks what we're doing, because everything looked great until it didn't. And I think that's important for you guys to see that. Next, on December 2nd. So on this trade, we had a breakout to new highs and then another failure. So these stocks are following this market weakness or creating the market weakness. Either way you look at it. But this was 9 shares at $33.42 entry by a $32.59 stop and a target of $35.10. This one stopped out slightly below my stop at $32.10 for a loss of $11.88. And just, you get in this trade and it looked good for 2 days, right? I entered here, had a nice tight entry. I probably gave it too much of a stop, to be honest. And then it kind of gaps up this day and then gaps up again, makes a new high, goes sideways for 2 days and then just sells off. So there's no way to predict that at all. There was no earnings event at this time. There was really no market news other than the market itself started selling off. So this stock just sold off along with the market. That's just the way it works. So we must be prepared for these events. This was another interesting one. Brightcove, symbol BCOV. This is the same one for earlier. I just wanted to show exactly where I bought, what the stop was, and you can see this was just in what's called stage 1 for like 3 months. Okay, at one point it was in a downtrend, and then it goes in the sideways trend for 3 months, has an earnings event, gaps up, and just takes off over the next 2 weeks. It gaps up again on news of the company being bought out. So I wanted to show you this because 2 reasons. One, buyouts happen all the time, and you won't be able to participate in that price action unless you're already in the stock. Because by the time this happens, it's too late. And secondly, buyouts can be seen on the chart. You'll just see it where it looks like it stops trading, it just goes flat like that. If you ever see it on a chart, start looking for news on that company, or even go to the company's website to see, was there some sort of merger or an acquisition or buyout. And if there was, if you were in that stock early, and whether it's a cash sale or a stock sale or whatever, I don't wait for the actual sale date. I just get out because I just take my profit and go. We look for the next opportunity because this is not going any higher. That's the price it was bought out at, and that's it. Over. Game over. But this was a nice gain. So again, this was a small stock under $5, and I gained $181 on that small stock. Next one is Tapestry, symbol TPR. If I remember right, I believe this is the old Coach ladies fashion company. Now they changed the name to Tapestry for some reason. Anyway, this is another one that took a little bit of time to move, but it was worth holding. I bought after the move up on earnings and a consolidation back here in September. And then, I entered on this gap up in this little uptrend. We had this little buy set up here, and the next day it gapped up. That's where I entered. My original entry was 45.11. Okay. Now, my original stop was $44. This is still an open trade. Now my stop is raised up to $54.98 up here. And so we can't really lose other than a major gap down. And look at all the volume on this stock. Look at the demand on the volume. This stock went from being not popular or not so much in demand to all of a sudden there's all this demand for this company. So, and that's what's driving this price up. So this is a real nice trade. I've got an open profit of $68 on Tapestry. Next one was Fiverr, FVRR symbol. This is where we moved from stage 1 to stage 2. So that's kind of the first clue. The prices may start to move up. We also had a earnings gap up on volume right here. Here's the day of earnings. Big volume. Prices started moving up. And then we have this gap up into that earnings day. So that indicates demand. So that's another clue. We also had a bottoming tail bar followed by a 3-bar turn or a buy setup right in here. So here's that bottoming tail bar after this earnings move. Then we have this nice little buy setup. We have this pullback, a little red bar, and then nice green igniting bar. So that's what I call a 3-bar turn buy setup. Okay. These are all clues that demand is here for this stock. We also had a market weakness in December, so pullback right here. You can see that. Okay. So we waited. I did not enter this yet. Then we have this kind of double retest right here where kind of prices came down, moved up, came down again, then moved up. So this is kind of showing kind of this turn into late December, whereas the market is still kind of pulling back. And look at the volume here on this gap up. You have this double bottom, retest, and then a gap up on this big volume, about 3 or 4 times normal volume. So that's another clue. And we also had the ceiling of price over here. Prices couldn't get over this area for a while, and now this ceiling has kind of become this floor in this area. I don't know if you guys can see that. But anyway, here we bought 8 shares at $34.65, stop of about $31.87, and a target of $39.15. So this is an open trade. Then we had this trade, American Superconductor, symbol AMSC. In all honesty, this trade was a mistake in hindsight, but How many trades can you take and lose less than $3? Okay, that's my actual profit and loss on this, minus 280. This stock sold off very hard on market weakness, but we'll watch it for a possible future trade. Lesson, honor your plan and your stops. So we have this huge area of support, right? Then this big move up, then a pullback, and then this market weakness just really affected the stock and actually damaged, the pricing of it. So this is what you call damage when it really sells off hard. So now we have to wait for this to rebuild to see, can the stock kind of get some momentum back to the upside. Then we have Elf Beauty, symbol ELF. So here I was trying to make trades and be aggressive. This was an early entry, breakout right here, right in this area. This was it. Again, this is a stock in a long-term downtrend, and downtrend. Notice how the floor area to the left is acting as a ceiling or resistance to the right. Can you see here where prices kind of held some support for a little bit? Well, now that same area is kind of acting as a ceiling as prices try to move back up. That's pretty normal. So this is a key area. That's all it tells us. This is a key area to watch. So we had a nice reaction to earnings on volume right here. All right. And some other transition clues. So another clue would be, right, volume on earnings, volume on this bottoming tail bar. We had some clues that price was kind of stabilizing right here, maybe creating support, and we transitioned from stage 4 to stage 1 and transitioning into stage 2. Now, unfortunately, we stopped out of this trade. Today's price is about $10 per share lower than my entry. So more expensive stocks will require larger stops. You must adjust your risk for the situation. So this is $125, $130 stock. So we're not in penny stock territory anymore, which means, generally prices can move quite a bit more in real dollars. Anyway, this was a losing trade. We lost $18.54 on that trade. I'm showing here some evidence for a continued uptrend. Unfortunately, on December 4th, we stopped out. We re-entered on 12.5. However, the day closed with a red bar with a topping tail, and the stock is showing over time increased earnings per share. So this is one thing that I kind of watch. It's not talked about a lot, but at least on my platform, I can see, and you can see this probably just by going to either a company's website or some other news service, the earnings per share. It's basically the bottom line. Okay, so back here in June, the company earned 5 cents per share times however many million shares are outstanding. Then it made a new high as far as price goes. Then it sold off into the next earnings event where they actually made more money. They made 8 cents per share. So go figure. Here you got 5 cents per share, price moves up, and now you got 8 cents per share and the price moves down. Sometimes these things don't make sense, but that's the way it goes. Then we start building what's called technical support. So here's the support area. Here's more pivot support. And then we get a long period here of about, I'm going to say about 5 to 6 weeks of just kind of back and forth consolidation or trading within range and just support under this area. It's pretty obvious to see. We also have volume, large spikes in volume during this period showing accumulation of stock. Now this earnings report comes out and it like triples what the past two were. Now they're earning 27 cents a share. That's really good in terms of growth. This report comes out and the stock makes a new high. Okay. Compared to this previous new high. So everything here looks really good, right? So now I'm thinking, let's find a way to get in on this stock. And, this looks good. This looks good. I've got kind of the screen bar at the 20-period moving average. Next day it gaps up. I believe that's where I entered. And the same day it leaves this topping tail. So now we've got something weird. We've got a new high, a lower high, and then a topping tail. So now it doesn't look so good. So let's see what happens next. Next day, this topping pattern is confirmed. Very next day, we get a wide range red bar, which is not a confirmation of strength. It's actually a confirmation of the sell-off of the market, and this wide range red bar confirms that. So basically at that point, the trade is over at that point. And sometimes you win, sometimes you lose. So this is just showing the S&P at the same period of time, where the S&P makes a weak new high on Friday, December 6th, and is still technically in an uptrend. But this is what I was thinking. Many of my stocks are weak, and something is not right. So on this day, I decide not to take any new trades, and I do what's called SOH, or sit on my hands. I'm not going to trade today. I've already decided. I've had too many losing trades recently. Let's just see what happens. Okay? That was my thought process. Sometimes the best thing to do is to just stop and take a step back. Now, this is the next trade I took on December 9th, which I believe was Monday. Okay? We could see the price tighten up into December 9th and break out, which would have been right here on this day. So price kind of moved up, pulled back, moved up, made a new high on earnings, then gapped down, and then just kind of went sideways here, tightening up price, right? On this day, it actually broke out over these highs. So that's where I entered. I bought 3 shares, 86.50, had a stop under here at 80, which is a very generous stop, and a target of at least 95. So the problem with this breakout day is that it closed with a topping tail. That's generally not good. And then over the next couple weeks, it failed to go over this area 3 times, even after what's called a shakeout on December 15th. So this was the first attempt to go higher that kind of failed. Then price kind of pulled back, moved up, and it failed again a second time the very next day. It moved up. Look, these 2 green bars look pretty good. Then we had a red bar that came in and engulfed the previous 2. That's strike 2, right? Then we have kind of this just inside day. Nothing really happened this day. Then we had next day a little gap down, move back up. That's okay. And then the next day we actually have initially a green bar that turned into this wide range red bar, engulfing the previous 2. And then the next day we've got a bar towards the top third of this bar. The next day we have a gap down and a green bar. So it's like, what is going on? But anyway, this kind of formed this little shakeout pattern where price kind of shaked out, came back up, left this green bar. Then we have 1, 2, 3 tight days, right? Where price didn't really move much. Again, a failure to move higher. In my opinion, this was the third failure to really break out of this area. And then after that, it just failed. And sometimes these shakeouts are good, sometimes they're not so good. But this one was a $19.77 loss, okay? Again, honestly, this was a much bigger stop than was needed. And by holding on too long, we cost ourselves other opportunities. A breakout is a continuation trade and should break and go quickly if demand is really there. And some of the clues that this wasn't going to happen was 1, market weakness, and 2, just the size of the bars, and 3, look at this volume. It's just average to below average volume. Even on this day, there wasn't, like this big demand for volume. It just barely got up. And so this is just a continuation trade that failed. Next. Next, we've got this trade. Organigram Holdings, symbol OGI. This we took 180 shares with a 26-cent stop risk. We entered at 166, stop by 140, target 206. This, in my opinion, was also not a very good trade. There's an entry at a time when the moving averages were down. Kind of a dangerous bottoming pattern, really. Lower probability trade. It's still an open trade, but we'll see. These bottoming patterns can take sometimes weeks, sometimes months to play out. We just don't know. And so that's one caution I wanted to share with you guys was you can see how flat this red line is, the longer term moving average. And you can see the shorter term moving averages kind of go under that. Well, price is pulling these moving averages down. So it's not as strong as I thought it was. Again, not a great trade. Also, during this time, we've got another picture of the SPY developing. Remember, we don't have this information to the right yet, okay? We only have up to here. And so we had this just kind of weak move up, a weak new high. Then we got a red bar, 2 days in a row. And so I just decided not to trade again on December 10th. Now we have Village Family Farms, or Village Farms, symbol VFF. This trade was taken on December 11th. We again failed to break out of a long-term downtrend off of a support area and a green wide range bar. So what do I mean? So this is kind of moving down, then it kind of built some support. So you got some support here, pivot support here, a bottoming tail, and then we get this wide green bar. So I'm like, that looks pretty good, right? And you know, it looked good for a minute and then just totally retraced. Over 100%. Just I got in and it retraces, right? Then it moves up, then it does this, and it puts another green bar in. So this time I didn't bite, and sure enough, it retraced another time. It came up and retraced 100%. So this is just kind of this range down here in a long-term downtrend. So it's cheap stock. We had tight risk to reward, but you know the risk to reward wasn't bad, but the trend is still down in all time frames. So that was not a good trade. Just look at the moving averages. Not a great high probability trade. Next. Again, another picture of the SPY over the next couple days. So this was the 10th, then we had the 11th where we had kind of this gap up, does not make a new high. The next day we actually have a gap down. And so we had this weak new high followed by 4 days in a row with price below that high. That is that's not good. So that's what I was seeing in the market at that time. So here it was Cardinal Health. I really like the pattern on Cardinal Health. Looked to me like a great price contraction and a breakout to new highs in an uptrend. So this is one that was in an uptrend, right? Blue, green, and red in order, pointing up. This trade failed. We exit on Friday, December 13th. So I decided again, let's just sit on our hands. Let's not take any new trades after this failed, because this actually looked really good. And then it fails and hits my stop. So not good. Not good. That should not have happened. I felt that was a much better pattern than the other ones. And what was this? We had, this is an ETF, a data sharing ETF, symbol block, BLOK. This trade was taken on December 16th, entry 53.48 on a new high, 5 shares, stop 51.80, target 57, and looked okay for a minute. Next day it actually gapped up from where it was and then left a red bar. And then the very next day after that it gaps down, stops us out, minus 12.15. So again, another indication that something is not right with this market. This trade only lasted 2 days. Now we have VF Corp, symbol VFC. This one pulled back with the market, but not as dramatic. More sideways than pullback. This one pulled back more in time than it did in price. So this one showed a little bit of relative strength, and it actually has recovered before the market has. And right now it's an open trade, and it's almost at the first target of $24. So this is a little, I guess, less than on relative strength. If you identify something that has relative strength and keeps relative strength through a market correction, and this didn't correct much. This did not hit my stop. And in fact, now that's moved up, we've raised our stop from 2070 to 2175. Okay. So I'm sorry, 2125. Our entry was 2182. So just by doing that, we've reduced our risk. Once this hits target or gets above this 24, we'll probably look to sell at least half of these shares, hold the rest. This seems to be a strong company. And anyway, I like this trade a lot better. Next trade was taken on December 19th. This one looked okay, but because I'm not familiar with the company, it's just over $10 stock, symbol DLO. I took a half lot on this one, 15 shares. Entry was 11.85, by stop 11.32, and this one I had a target of 13. This one actually stopped out on the very next day, I believe. And yeah, it stopped at $11.16 on a gap down. So here we entered at 11.85, and at some point during the day, this was probably a green bar. But anyway, it sold off the rest of the day, left the bottom tail, closed here. The next day, it actually gapped down. Remember, a green bar opens and closes at the high. So this actually gapped down, stopped us out, and finished green. So that was a loss of $10.35 on that trade. This next one was taken on December 23rd. This is a follow-up on a breakout on December 22nd. However, the day ended with a large red bar. Not good. In trade review, I missed the entry, honestly, and I entered too late. And buyers simply did not follow through after I entered. Not their fault, that's my fault. My stop was also too generous. Now prices retraced down by the 50-day moving average. So you can see price slowly pulling back. Here's the 20-day, here's the 50-day moving average. So we've crossed these lines. They're not resistance, but they're followed by so many traders they can act as key areas. I'll say it like that. And it's moved down back towards this initial gap area. So price here pulled back. Next day it kind of moved up. The next day it gapped up in a significant way. So price has actually moved back down into this gap area. Anyway, this is what I'm going to keep watching, because sometimes this happens. Stocks will gap up, make a nice new high, but then they'll pull back right after that into some other area, whether it's a gap area or a previous support area. We'll just see what happens. Anyway, I stopped out. Not my best effort, to be honest. Minus $20.63 on this trade. Next was Chicago Atlantic Real Estate Finance Company, symbol REFI, R-E-F-I. We bought 18 shares at $15.97 on December 23rd. This looked like a 1, 2, 3, where this bar completely engulfed the previous bars and then looked like it was going to go. And it did. Actually went up like 4 days in a row, made a new high. But my target was way up here. This was a buy setup that initially followed through to the upside, made a new high, and then just fell apart. I had a good potential risk to reward, but the trade failed. So you could just see, right, it made a new high, and then next day we've got this red bar, and next day it just gaps down. Loss of $5.51 on the trade. December 24th and 25th were a holiday for me, so there was no trades on those days. I also didn't take any trades on Thursday the 26th or Friday the 27th. So simply because this was not a good market environment for my plan and my style of trading. You can see I've had quite a few losses there in a row. So let's just let the market settle down is what I was thinking. Let's sit on our hands. The funny thing is, if I had not traded during this period, surely the market would have went up, right? It's kind of like Murphy's Law. What can go wrong will. Kind of like when you're watching your favorite team lose a big game, right? If you hadn't watched the game, they probably would have won. Anyway, the next trade we took a look at was Rapid7, which I believe is software, symbol RPD. So this is another bottoming pattern. You can tell that immediately by looking at this long-term moving average. It's just flat, right? So this has been flat for a while, even though the daily chart is kind of back and forth. And the two shorter-term moving averages were pointing up. And we also see some support areas here on the chart. So pretty easy to see, right? I entered here after it showed this, we kind of made this low, and we kind of made this, it looked to me like a lower low at the time, and we started getting some more green bars, but this is a bottoming pattern, which can be dangerous. We had multiple retests of support area by 38, so this is around the $38 area, where we kept retesting that area. And then after I entered, support failed, we stopped out for a loss at minus $14.20, so another losing trade. Then we had Perfect Corp, symbol PERF. We entered this also on December 31st, bought 50 shares for $297, stop 275, target 350. This was again a failing trade, minus $19. The pattern and the volume look okay, but price retraced against me. So this actually looks like a pretty good pattern, right? Strong move up, pull back, get on board, strong volume, and then it just fell apart. So that one is still on my list to watch because it had some tendencies that I kind of liked about that trade. But again, another losing trade. Then we took no trades on Wednesday, January 1st, the 2nd, or the 3rd. So no trades Wednesday, Thursday, or Friday, January 1st, 2nd, and 3rd. I just wasn't comfortable, wasn't feeling it. It's a new year. Let's just take a break. Okay. Now we have, I wanted to show this to you guys because I think this demonstrates the power of when you do have a good entry and you do have good trade management and you're able to sell half your shares at a nice level and take some profits, it really kind of opens up some choices for you. Okay, that's just what I want to show you on this chart. So this was a longer term trade from November 6th, a little bit before this challenge started. Okay, so I was already in the trade before the challenge. So I sold half, and now I'm holding the other half as a core holding. So we held this from November 6th all the way up here. We get this double top. I sell half. Let's just see what happens. I think the company long term has good prospects. So I'm positive on the company. This is an earlier trade before 30 and 30. However, I wanted to show the power of taking profits at some point. By selling half my shares at a high point or at a target area, it allows me a free trade by putting my original risk back in my pocket. Now I can hold shares for longer and ride out the inevitable pullbacks in stocks, which occurred in December. Now that the chart is starting to show signs of turning up, I chose to re-enter at an average price of $21.40 right here. Stop at 18.10 under here, and we've got a generous target up here at 35. So this is a low stress, low risk trade with a nice potential risk to reward. So you can see we've got this risk here, and you can see the reward is potential reward is up here. If this works out, this will probably be 3 or 4 to 1 trade. And if price does start to move up, we can also do what? We can raise our stop along the way. So we just have to see how this plays out. But this is a trade that, because I sold half back here, I was able to sit through all this pullback. And now I'm able to buy back in at a lower price and see what happens. So this is just, to me, this is just better trading. Okay, that's all I'm showing there. This is a little bit longer term chart, still daily chart, but it's over a 9-month period. Showing my original entry here on this buy setup. Shows where I sold half, and now it shows that price is retraced just a little bit below my original entry. And you can see it's starting to develop some areas of support. And you can see long-term moving average is pointing up. So on a weekly chart, this is probably a pretty good looking chart. That's where we're at. And you can also clearly see, after this, I guess, period of inactivity down here, where volume just really came into the stock. All of a sudden, investors in Wall Street and institutions became really interested in the stock. So I really like that for going forward. I'm glad I'm able to take a small position in that. Okay, then we had no trades on Tuesday, January 7th, or on Thursday, January 9th, due to the closed markets for the death of former President Carter. And now we took this trade on January 8th, okay? So this stock is a long-term sideways trend looking left to right, okay? Then we had a gap up on earnings right here in August of 2024. So you can see sideways below, prices below the moving average, right? And then we get this gap up on earnings. Sideways, then the stock moves sideways to the next earning event. And now we get another gap up. So it just kind of does this, kind of gives this pattern that was tempting to take, but I didn't take it because of the market weakness at the time. I was like, well, let's just watch. I entered over here after price started to move up again. I entered right here on this bottom and tail bar after we had a red bar and then a reversal bar, and then I entered over that. Okay, that's where I got in. So I entered on the breakout at the first blue arrow right there. After red bar ignored and a bottom and tail bar the next day. An even safer entry would have been 3 days later on the buy setup at the converging 20 and 50-day moving averages with that igniting green wide range bar. And currently we're showing an open trade profit on this one. So an even better entry actually would have been right here, where prices pull back, put your entry over this bottoming tail bar right there, and you would have immediate appreciation right on that day and over the next 3 days. So you'd be in an immediate winning position. Where I entered, I started to show an immediate loss, even though this is a valid breakout and a valid gap up. But this pullback, this buy setup was even better. And you can see how the price just kind of move back towards the moving averages. Another clue that this was going to take place was this volume bar right here. Look at the size of that compared to everything else. That was a clue that institutions were really interested in Cardinal Health, symbol CAH. So that's an open profit. Next trade was Pure Storage, symbol PSTG. Here we entered on January 10th. Entry 64.90 by 60.50, target 70, 5 shares. Again, we have this sideways pricing below the moving averages. Then we have a gap up after earnings. Sideways price action for probably 3 or 4 weeks. And it's just not retracing. It's just not going down. And that just shows demand, okay? So this is one of my favorite patterns after earnings. Nice gap up or move up after earnings signals strong demand. You wait for price to contract over a period of time, usually somewhere around the 20-period moving average. Then enter and wait for the next move higher. In this case, new highs is what we're looking for. While waiting, there's little to no selling, indicating low supply, confirming demand for the stock. So we're showing an open profit. We're just waiting for the target. This is easier trading. Notice all the volume spikes. Notice volume is also confirming demand. So this should hit target, and this should be a very profitable trade. Next, Uber Technologies, or Uber, symbol UBER. Obviously, most people would recognize that stock. So interesting thing about Uber is that if you look at this long-term moving average, it's flat. Okay, Uber is at about the same price it was a year ago. So this is a very speculative trade I'm taking here. I like the company with improving fundamentals. The chart is not great, however, price just made a higher low. And with risk management, there is a good risk reward to at least a first target area. If price does move up, this would allow us to raise our stop and or sell some shares and hold for the future. So we can see short term, this is kind of this downtrend, made a low, and then we started to build support here at a higher low area. This higher low area indicates there is at least some demand or buying pressure for the stock. We don't know how much yet, but so this is a pretty speculative trade and is currently an open trade for me with a very small profit. Now we've got, again, Elf Beauty. This one we have 3 shares, entered on January 13th at 128.30, stop 123.85, target 144. Again, this is a long-term downtrend, short-term uptrend, okay? I kind of like it because price moved up after earnings. You can see here's the earnings event, price moves up, volume moves up. So that's a positive. Next clue is this bottoming tail bar on volume. Okay, well above average volume, signaling that there's demand for the stock. Think about it. Price opens here, moves up a little bit, sells off most of the day in a significant way. That's a large bar. This tail counts. And then by the end of the day, buyers step up and just push price right back up. That's an indication of demand with that type of volume. So that's a positive. Then after that, we make a new 3-month high, kind of signaling at least an early end of the downtrend, right? So this is a long-term downtrend. Price is now really moving up above that line. And then we get this price pullback in a steady fashion. It's not very sharp. It's just more steady. Just kind of does, a real smooth kind of pullback and starts to turn back up a little bit. So this looks like we're building support. over several weeks. I think that's a positive. One real negative on this chart is Friday's bar right here, this last bar. And that is a wide range red bar. That's very negative. But we've got our stop in place, target in place, and we'll see what happens with that. Again, Maple Bear, symbol cart. Price is now starting to turn up on volume. You can see kind of a resistance area indicated by this black line. You'll see price getting tighter and tighter, and then it finally gaps up over that resistance. And it's held that area for 4 days, so I like this. This is a future trade. And, you know, this long-term moving average is still pointing up. So long-term, this looks pretty good. So now let's talk about our results of our 30 for 30 activity. There was actually more than 30 trades here. Anyway, this is the bottom line, what took place during this period. I had a win-loss rate of 34%, including both open and closed trades. We had 11 wins and 21 losses with 13 current open trades. These could be wins or losses. We don't know yet if they'll stop out or go to target. Anyway, we had an average win of $32.37. Our largest win was $181. We had an average loss of $15.96, and our largest loss was $62.32. Our total profit, including open profits, right now is $356.03. Our total loss, including any open losses, is $335.11. So, even though all the trades aren't closed yet, we have a final P&L as of Friday, January 17th, of positive $20.92. Again, this is based on both open and closed trades as of Friday's close. So that's where we're at. I would say not the greatest performance, but I think we also have to consider the market environment, which was unexpected and certainly turned against us on this activity. At the end of this presentation is a copy of my tracking spreadsheet if you wish to review it. Again, the first trade was not filled. Red color on the sheet indicates a stopped out closed trade. Light teal indicates a closed trade with a profit. Light blue indicates an open trade. And tan color indicates that we did not trade on that day. So good luck trading, guys. Thanks for watching. I hope you learned something from this. I hope it helps you out. I hope it actually keeps you out of trouble. And anyway, here's just some quick views of my spreadsheet starting back on November 19th. Again, I believe it was 34 trades I took, not including the first one that was never filled. So I'll just leave this up here for maybe 15 seconds. You're welcome to take a screenshot or pause it if you want to review these numbers for yourself. There's going to be 4 pages, so this is page 2. And this is page 3. And finally, page 4. You'll notice at the end, everything is blue there except for one because those are all still open trades. Again, thank you for watching, subscribing, and sharing this channel. God bless you. We'll see you on the next video. Thank you.